Well, now I'm joined by James Shugg. He is Chief Economist for Westpac Banking Corp. Thank you very much indeed for coming in to talk to us again, James.
Good to be here.
If we have a little look at, it's all fairly depressing news, but at the housing market in the US, we don't know those figures yet, but you're thinking they're not going to be great, aren't you?
Not great. I mean, we're looking for a 5% bounce in existing home sales, but remember they fell almost 30% in the previous month. And we've had a bit of a guide from the pending home sales numbers, which give you a feel for what the existing sales report's going to show. And it had a little bit of a bounce in the latest report, but yeah, I mean, a 5% rise from next to nothing isn't much. And if you look at the new home sales figures, which are coming out tomorrow, they might show a similar sized increase, but again from an incredibly low base. The housing market is now so small in America that even a much stronger bounce would actually mean very little in terms of its contribution to the broader economic story.
And the problem, of course, is that the stimulus measures have already been in place. There's not an awful lot more, is there? Even if there was QE that could be done at this stage to kind of try and get it going again.
In actual fact, fiscal policy overall, on an unchanged basis, is going to amount to about a 2 percentage point drag on the economy over the next couple of years as the Bush tax cuts fade off, with no longer the stimulus that we've had in the auto sector and the housing sector, and the state governments, apart from Vermont, they can't run deficits. And so we're seeing significant cutbacks in spending and employment and services provided by the state and local governments in the US. Combined, those factors are going to be a very heavy weight against the US economy for the next few years, on top of households' greater inclination to save, businesses being reluctant to invest, unemployment at 10%. The US economic outlook is very weak for an extended period now.
You mentioned unemployment there. We've got unemployment figures out today. We're not really hoping for any particular light at the end of the tunnel there at this stage either.
Well, actually, our sense is that the Labor Day holiday may have actually pulled down the jobless claims numbers in the last couple of weeks. So we're looking for a jump from 450,000 up to about 465,000. So if anything, we think that the labour market numbers today could kind of add to this sense that the labour market actually is softening in response to the fact that the economy slowed from 5% annualised at the end of last year to around 1.5% in the middle of this year. I mean, accompanying that is a much weaker labour market story, and we think today's numbers will point in that direction. I
read a very interesting note today from Bill Hubbard, one of our regular contributors, saying that he thinks that QE that they were talking about at the Fed could actually come in at the next meeting, which is the 2nd and 3rd of November. Do you think that they might do it that quickly?
Our sense is there probably will be a further bout of QE. We were thinking that it would probably take a contraction in the economy to actually see the Fed deliver it. Based on their statement this week, it's almost as if a continuation of the numbers about as they are at the moment would be sufficient for them to do a further dose of QE, particularly if there's no further fiscal stimulus measures announced.
Now, George Papandreou over there, like an awful lot of leaders, obviously at the UN this week, but talking a lot about how selling his country, really, for investment. The sovereign debt crisis is another drag, isn't it?
It is, and we still remain very sceptical about what's going on in the peripheral European economies. You try and pay a hotel bill in Greece now. My credit card machine not work. You go get cash. So you go and get as much cash as you can and then go back, and then miraculously the credit card machine works again. In other words, they're trying to encourage the cash economy to avoid having to pay the increased taxes. That's going to make it very difficult for Greece and indeed the other peripheral European economies to meet their budget deficit reduction targets.
Okay. James, thank you very much indeed for that.
Thank you.